Okay. So I'm going to start the recording and go ahead and get started. First, I'll end the poll. We had about 50% of the audience has some, but is considering adding more, and 50% say they don't know. So I know a few people are our clients on the call, so I'm happy to show you what you do have if you like. Okay, so yeah. So today I did this talk last year around Green Day, and I gave a lot of background on different types of green and ESG investing. This year I wanted to give more updates on what happened in this past year. The market has changed a lot since Earth Day in 2022. So I'll give a little bit of background on different types of green or environmental investing. But I would refer you to my presentation from last year if you want to do a deeper dive into some of those. Then I'll get into some major news that happened in 2022 for ESG, cover some performance in ESG in 2022, talk about the politics of ESG, which has been getting more and more, I don't know, in the political crosshairs, you might say. And then at the end, discuss a little bit of what Propel does for our clients as far as ESG is concerned. So a background. So there's essentially 4 different ways we can consider green investing or environmental investing. So a traditional approach, that's what you could say. You make as much money as possible in your investments, and then you donate to charity. So I have here a picture of Douglas Tompkins. He was the founder of North Face, very wealthy man, made a lot of money, and then he donated that money to Chile. He bought 2 million acres of land and turned it into a conservation area in Patagonia. So that's one way, right, to do it. Divestment, that has been gaining a lot of steam, especially in people wanting divested from fossil fuels, pushing for pension funds or endowments to eliminate fossil fuels from their investments. So divestment is like a screen to eliminate certain things you don't like. Impact investing, that's a more of a proactive approach. I put here a picture of windmills. So you could say, I would like to invest in the energy transition. I think windmills are the future, so I'm going to put my money in windmills. And ESG, environmental, social, and governance factors, that is gets often lumped in with green investing, and a lot of ESG type of funds do incorporate either divestment or impact investing into their approach. So a lot of the products on the market can be a mix of all of these different approaches. I'm going to get into a little bit more about ESG here in a minute. And Elon Musk, I put there, he's a fairly big critic of the use of ESG factors in investment decisions. So just to give a little bit of background on ESG, like I said, the E is environment, S social, G governance. These factors provide a framework for analyzing risk, and it is a form of investing analysis that goes beyond just the financials. So just for governance, we would say that's how well a company is managed, what the CEO is doing, what the board of directors is doing, how they're performing. Environment, it's things like, are they getting ahead of regulations? Customer preferences, there's studies that show on the margins, customers prefer a green product compared to just a regular product, so it can help with sales. Social would be more like relationships. What is the management's relationship with their employees like? That could be anything from labor relations to DEI initiatives, and to customers. So we're looking beyond the relationship with the shareholder, which is traditionally what companies would consider is keeping their shareholders happy. Okay, so here, just to illustrate how ESG work, I have just a fictional case of Mainway Incorporated. They sell a toy to children and they use recycled materials. They've had a lot of popularity lately on TikTok, and their sales are through the roof. They're making tons of money. So their financial picture looks really good. In the meantime, some parents have started to criticize these toys, saying they're inappropriate, but the sales continue to go up. Mainway has responded saying, we're just packaging what the kids want. Okay, so if this is all we know, we just know the financials are good. We see maybe there's some controversy there, but would you invest in this company? What else would you want to know? So if we're thinking of an ESG analysis, we would think of it this way. And so this is sort of a setup because Mainway is from the classic Saturday Night Live skit with Dan Aykroyd, where he's selling a bag of glass. So obviously, once you know the context, you start thinking about the financial picture in a different way. So social factors, you would say, okay, we're getting criticism from parents, our customers aren't happy, it's hurting children. This is becoming a distraction. So you would say, okay, within 3 years, this company has to pay out a ton of money to settle a lawsuit. They're losing customers and they're not spending money on R&D and developing new toys. So even though their financials might be really good right now, an ESG analysis would predict that in the future, their revenues would go down. So I included the link here to YouTube. I know my husband had never seen that skit before, so if you haven't seen it, it's pretty funny. Dan Aykroyd, I think, is hysterical. Anyway, so now here in real life, so earlier I mentioned Elon Musk. Tesla was in the news in 2022 because the S&P 500, which is one of the biggest, or maybe the biggest index in the United States, they also have an index that's specific to ESG. So as part of the construction of their index, the S&P, they will consider companies within a sector. So Tesla is a company within the consumer discretionary sector. And so they'll say, what's Tesla's ESG score compared to other companies within that sector? Other sectors might be in the energy sector. So like Exxon, they'll say, oh, how is Exxon doing on different ESG metrics compared to other energy sectors? So the way they construct this index, they're not comparing, say, Tesla to Exxon. They're comparing Tesla to, say, Ford Motor or another consumer discretionary company like Amazon is a big one in that sector. Okay, so last year, the S&P 500, they rebalance every year. And so they removed Tesla from the S&P 500 ESG index. And a lot of people were surprised at this move, especially Musk, because Tesla is known for their electric vehicles, which arguably is good for the environment. Oops, I just missed my slide. So why did they do this? So they said, Tesla lacked a low carbon strategy, so that's the E factor. They lacked a code of business conduct, so that could be maybe the S and the G factor. They had some racial discrimination problems at their Fremont factory, along with poor working conditions. They were heavily criticized during some of the COVID lockdowns, and that was causing them problems. And then when they're autonomous vehicles, they had a number of accidents and deaths from those cars and were investigated by the government, and S&P thought they handled that investigation poorly. So yes, maybe Tesla cars are good for the environment, but the other factors about how they're running the company cause some concerns and cause them to be removed from that ESG index. So just remember, it's not here about the product, but it's about how the company is run and the risk that can bring to investors. So here, this was Elon Musk's quote from Twitter. He's saying ESG is a scam. He's comparing his company to Exxon, but that's not how S&P does their index. They don't analyze it this way, comparing Tesla to Exxon. They were comparing Tesla to other companies, right, within the consumer discretionary sector. Okay, so in 2023, actually, the S&P just released that they are rebalancing, and they have said that they are going to be re-adding Tesla. So they have not released the reasons why. They usually publish that in early May. So I'm not sure exactly what happened, but presumably they fixed their code of business conduct, worked on their factory. I don't know. We'll see once that blog comes out. And then they did remove Exxon. So I don't know what Exxon was up to. Okay, and so why are people getting so worked up about this? It's because ESG is big business, and it's a lot of money, and it can impact performance. So we look at how ESG performed in 2022. This is a look at S&P 500's their ESG index versus the S&P 500's regular index. So in 2022, we saw 0.44% of outperformance. 2022, I know, is so tough to look at because of those big negative numbers, but it does serve as a good test for some of these investment approaches. If we look back to 3 years, we can see the S&P's ESG index outperformed the regular S&P. With annualized, it would be about just shy of 1.5% per year over the last 3 years. And that index only goes back about like 3.5 years. So further back than that, we don't have reliable data. But not all ESG products are made the same, just like any investment. So overall, the performance of ESG compared to non-ESG funds was not as good in 2022. This is through December 19th from a Refinitiv study. So it's not year end, but it's close. So you can see 2019, 2020, 2021, we saw significant outperformance. 2022 overall, not as good performance. But the poor performance in 2022 did not erase the overall outperformance from ESG funds. Another thing we look at in ESG is the fund flows. And so this is what I mentioned before, people getting worked up because this is big money. You can see the green bars show the amount of money that has been flowing into ESG and sustainable funds. This is from Morningstar study they did. So you can see just huge numbers of amounts of money flowing into these funds. 2022, we saw the biggest fall off in years. But the inflow was still positive, even though it has significant, you can see how much it's fallen off. And the blue bar here, this is the all US funds, their organic growth rate. So that was actually negative in 2022. So the broader universe, you can see here, $370 billion people withdrew from the stock market in 2022 for all US funds. Oh yeah, I wanted to briefly mention that if you are interested in ESG or sustainable investing, where you buy your ESG fund does matter. The big one that's in the news a lot is BlackRock. They're typically one of the largest providers of ESG and sustainable investing. State Street is another really big one. And then Vanguard in 2022 passed them, and they had got the most new money into their sustainable funds in 2022. But here is another also from Morningstar's report. They took the largest sustainable and ESG funds and analyzed how they voted in ESG resolutions, or like shareholder resolutions. So you can see here Parnassus, they are and Calvert, they've been doing ESG and sustainable investing for decades. You can see they have voted in support 100% of the time. Vanguard, meanwhile, voted in support 20% for its social index. Its ESG stock voted in support 22%. So these are very different approaches to ESG voting. Vanguard also was in the news in 2022. They had signed on as part of a net zero asset manager alliance. at the end of 2022, they left that alliance. And so they said, Vanguard said they're now going to remain independent and have are no longer making climate commitments. Part of that is because of politics. So let me give you a little bit of background there. So the Department of Labor, that's the federal agency that oversees 401k funds, 403bs, the employer retirement plans. So under the Trump administration, the Department of Labor had a rule where they wanted to curtail the considerations of ESG and other climate factors as part of the investment analysis in 401k plans. After that rule was never put into effect. But once Biden took office, he said he was not going to enforce the rule. And then by November 2022, Biden administration had proposed their own rule saying that it was okay for 401k plans to consider climate change and ESG factors. But in January of this year, now they were sued by 25 different states' attorney generals to block this rule change. So right now, the way it stands is there's no rule in place pro or against this, but this political back and forth has had a chilling effect where there's not a lot of ESG or green or sustainable investing, however you want to phrase it, in 401k plans. And then also earlier this year, the Republicans took control of the House. They passed a bill in the legislature to ban ESG considerations. That passed, and then Biden vetoed it. And then just a few weeks ago, they held a vote to see if they could overcome the veto, which they lost. So they're trying to change this through the Department of Labor, also through passing legislation. And then if we look here, there's different state laws that are starting to be passed. So you can see there's different states, depending on where you live, there's all different approaches. These tend to fall along, Republican, anti-ESG, Democrat, pro-ESG. So it's sort of who's the governor of your state, and that's sort of where you're going to fall. There had I mentioned a lot of the Republican pushback on ESG. It's also coming from the left. The left is saying, well, it should be up to the government to regulate our businesses, and businesses saying that they're going to do these ESG considerations is not a substitute for actual legislation. So they're trying to pull the wool over your eyes, and the government still needs to step it up and regulate them. Okay. So Texas is the big one that has actually passed an ESG bill. A lot of the other states, they're still just pending or proposals. The Texas law is really broad. It prohibited state pension funds and state agencies and county and municipalities from using major banks that do sell ESG funds. So like, for example, Morgan Stanley sells ESG. So now Texas agencies aren't supposed to work with Morgan Stanley. So, or any bank. So it's limiting the number of banks that they can work with. This has resulted in big expenses because there's just fewer people that they can work with. And this has led to some pushback. There's a one in Indiana. They have withdrawn it from consideration because they realized they ran numbers that it was going to cost $7 million. Kansas also some pushback from the pension fund saying that it was going to reduce returns and hurt pensioners. So I don't think, even though there is pushback, I don't think these types of bills are going to go away anytime soon. So despite all of these becoming a political issue, there was a recent survey that said 85% of people don't even know what ESG is. But because you've come today, hopefully you now feel like you're more in this 50% here. So I just wanted to mention quickly what Propel does. So like I mentioned before, in 401k, 403b retirement plans, you tend to have limited selections of ESG funds, if any. Typically you can get them in your Roth or rollover accounts, like a Charles Schwab, like we do for clients. 529 plans are starting to offer more ESG funds. Last study I could find showed 18 different states now offer them. And then in your regular brokerage account as well, you have access to all different types of investing. Here is a sample portfolio I made for a model portfolio that does consider ESG as part of the portfolio. We use a software called YourStake that can analyze how the portfolio's different values can line up compared to other things. So here I took my model portfolio and I compared it to the MSCI ACWI, which is an index of the whole world. It's a global index. And so you can see here, okay, so this portfolio, we can have 89% less toxic pollution, water pollution, 72% less syn chemicals. So syn chemicals are carcinogens, toxins, those types of things. Fossil fuel, 75% less fossil fuels, 87% less environmental violations. Whatever is, they're all different types of metrics we could use. That's just an example. So you can have a significant impact in your portfolio on the environment just by changing what you're investing in. And then if we took the same portfolio and see how it performed compared to the index, this is over the past 3 years. Like I mentioned, a lot of ESG funds don't go back much further than that. So I just wanted to include 3 years. So this portfolio, I took a hybrid approach considering both ESG and performance. About 68% of the investments had an ESG bent or sustainable bent to them. And your performance is not suffering, even though you're considering the environment as well. So here, I'll share my next untitled poll. Would you like more or less ESG in your investment portfolio? I would love to hear what you think. And if anybody wants to put into the chat why or why not, I'd love to hear that too. We do have a few minutes left, so I do have some time for Q&A. If anybody has any, please let me know. I'll just leave the poll open for another 30 seconds or so. So far we got the majority of people would like more ESG, so that's interesting. Other people are not sure. Okay, I see a question here. Do ESG typically have higher or lower fees than other options? So yes, typically ESG funds do have higher fees than other options. Despite that, well, any ESG funds tend to be more actively managed. So typically an actively managed fund is going to have a higher fee than an index. So there's that. And then there's also the index I discussed at the top of the hour, if you were here for that part of it. I think the fee on that is like 30 something basis points. So compared to a standard S&P fee would be like 4 or 5 basis 0.04%. Excuse me, I'm saying basis points. So it is typically a little bit higher. This portfolio I'm showing here is net of fees. So this is after the fees have been removed. compared to just the index. So even with the higher fee, we tend to see higher performance, but not always. I have a question on, are there any new factors added to the ESG methodology from time to time? I don't, not off the top of my head. I think that it really depends on the fund and their approach. So I think, I would like to read S&P's analysis of what they considered when they published their blog explaining why they updated their index with the what caused Tesla to be added back in, or what caused them to remove Exxon this time. So I just edited the poll. So you can see here some more interested in ESG. I'm happy to reach out and discuss that with you. If you like, just let me know. I'm going to put up here, if you'd like to contact me, this Zoom link takes you straight to my calendar to book a Zoom meeting. You can email me anytime, call me or text me. That's my phone number. That's my cell phone number. Here is our YouTube channel. I mentioned our 2022 webinar. That's a link to that if you're interested. Emily and I do a podcast that comes out every other week, and we've done a couple episodes on sustainable investing, and I'm also on LinkedIn, and I'm trying to be more active on LinkedIn, so feel free to connect with me there too. So unless there's any more questions, thank you everyone for coming today. I hope it was informative, and I love to hear from you if you do have any questions after the fact. I'll send a copy of the recording, and some of these links I can include in that email as well, so it's easy to click through. Okay, thank you everyone.